Now, Momentum has posted a 39% jump in annual headline earnings per share, driven by positive contributions from most business units, with Momentum Corporate the star performer with a 47% increase in sales. A dividend of 65 cents has been declared, bringing the total full-year payout to 125 cents, reflecting a rise of 4%. Company CEO Jeanette Marais joins us with a greater perspective on the performance. Thank you so much for your time, Jeanette. Now, just lay the table for us on the key highlights that have boosted the company's profits in this reporting period.
Thank you very much, Nati. Yeah, look, I think, a very pleasing set of results. And I think all of us, and you probably hear this all the time when companies report back right now on their results, is that we all say in spite of, in spite of a difficult economic backdrop, in spite of the fact that our economy is not actually giving us growth. You could very well ask, where did the growth come from?
Yes.
So in our case, I think that the benefit that we have as a group is that we are a very diversified group. Well, all in financial services, of course, but the fact that I think we cater for every single financial need that a client could have, all the way, almost cradle to grave, all the way from when they first start to save, right through to when they start to invest, making provision for retirement, their healthcare needs, their life insurance cover needs, funeral benefits, all the way, obviously, to pension funds administration, and then, of course, short-term insurance as well. So I guess, in a way, what you need in a group like ours, and that's the benefit, and we saw it through the COVID time as well, is that often you have one or two of your businesses that is severely impacted by the economy or whatever is happening, but at the same time, you have other business units that actually come to the party. And by far, the biggest contributor for us this time was that every single one of our businesses across South Africa, Africa, and, even the growth in our Indian business has actually come together to give us this phenomenal set of results. And then I think lastly, my proudest moment is our new business sales numbers.
Yeah.
We really managed to outperform the market in many ways in terms of our new business sales. And that is always almost a barometer of trust that financial advisors and clients have in you as a business, and something that we're very proud of.
Well, actually, quite interesting dynamics there when you do look at new business. Of course, there was a growth in volumes there, but value of new business and those margins there were under pressure. Talk to us about, what you are seeing there.
Yes, of course. So, I think in order to understand that, value of new business, or VNB, is this kind of very technical term. But in my language, because, I'm also not an actuary, so I also now understand it.
Good.
Your value of new business margin is really mostly determined by two things. On the one hand, the new business volume sales, your sales volumes. But on the other hand, the cost at which you administer the business once it is on your books, and of course the cost that you actually spend on acquiring that business. Now, in our case, as you could have seen from our really great numbers, our present value of new business, our sales numbers are up 19%.
Yes.
We've written 82.1 billion rand of new business last year. But on the other hand, the cost of administering that business, is too high. And that is what we really need to work on.
Okay.
Now, it's not just cost. There are also some of your businesses that you sell, for instance, savings business, really have very, very thin margin. In fact, I often say that it's almost one of those things that we do because we know our clients need to save.
Yeah.
But there's almost no profit in those business for us. We do it because we know that it's the right thing to do.
Okay.
And you have to make sure that you balance the type of business, we call it our business mix, very, very well, so that you have enough business that can keep the lights on when at the same time you try to administer businesses with a small margin much better, and obviously reduce your acquisition costs.
Okay, and that's actually where diversification actually helps. Thank you so much for explaining that to us, Jeanette. Just also some of the headwinds outside of South Africa now in India, because I did notice that the loss in India widened. What level of pain did you experience, and for how long do you foresee this pain lasting?
Well, so the Indian business actually is quite an interesting one because it's not as if our Indian business has had any headwinds. That is still what we would call a J-curve business. We are still investing in our growth in India and in the Indian market. So the losses there at the moment is actually not a real loss. It's actually the capital that we are still investing in that business to help with its growth. So I think, maybe to just highlight we are currently the fastest growing standalone health insurance business in India. We have a 12.5% market share in a massive market. I mean, that market, is just multiple times bigger than the South African market. And we remain very optimistic about the growth opportunities, but we are still investing in the growth in that market. However, we do plan to break even by 2026 and then obviously turn profitable in the Indian business. But we have actually been in a period where we still needed to put capital into growing that business.
All right. Well, we do have to wrap up the conversation there, Jeanette. Thank you so much for your time and also the explanations that you provided for us, because I know that insurers sometimes some of the terminology does get a little bit complicated for us, the people on the street. Thank you so much for your time. That was Jeanette Marais, CEO of Momentum Metropolitan.